Hello traders, welcome to the Running Forward channel where we look for trending charts and plan our trades. So today is a big swing day as well. The swing is about 6-7%. Let me give you a little update of the trade I got in yesterday on the XLF. So because of yesterday's green candle, I said only institutions can push the candle up so much. And if we come to the weekly chart on the SPY, it looks like we're to find some support near the January 2022 high. And I said, you know, in the past when the market has correction or pullback, the Wall Street always make sure that they get paid. So I don't know which financial company will be the leading stock. But so that's why I got into the ETF XLF. And this morning when I was peeking at the market, I felt like I have the prediction superpower. But then by the time the market closes, I'm about even on that trade. I don't know what's gonna happen with this ETF, how the price is gonna react. But right now I'm still holding it. It's a gamble trade, I know, but I have a stop loss in place, so we'll see how it goes. And in the past, I have mentioned that if I can help it, I normally like to get into a position at about the end of the day because by then I have a better idea of how the daily candle is gonna look like. Today, though, I don't have time. I didn't have time to watch the market, but I did log into my account during lunchtime, and then I glanced through my watch list, and I found this one, and I was like, "Oh, this looks pretty good." I remember at lunchtime the candle was not this red. I think it was green. So I was telling me, okay, looks like this one is stronger than the market because while the market was pulling down so hard, it was consolidating ne- at the top near this support area, and looks like it might want to go even higher. So I got in, and then I have to come clean. The market got me. I got in at about 12:30ish, and an hour later I was stopped out. So my bad habit of wanting to trade got me. That's hopefully you can learn from me not to make that mistake. Um, but I do still want to share with you three ETFs to be exact, with you that's still on my watch list. These are not financial advices. These are for educational purpose only. So the first one I want to share with you is KOLD. This is the natural gas short ETF. So this one, as you can see, it is not going crazy like the other inverse ETFs. It's it has formed a bottom and now it's going up. It just crossed above the 50 MA on the daily, and if it gave us a little entry area, we can enter here, and then there is potential to come take out this resistance area at about 33, and maybe even tackle this recent high here at 41. That will be a big um, stop loss if we get in at the top, which is why I don't recommend. I'm hoping that the market will pull back a little bit on this one and give us an entry somewhere maybe at the middle of this candle. If we can do that, that's maybe manageable, 7% risk. And then first target is about here, that's 36%. And if it can come over here, that's 68%. So the risk reward ratio is good if you can handle the risk uh, part of it. And if we come to look at the UNG, that's why I like KOLD so much, because UNG, as you can see, has clearly formed a lower high and lower low, so it's in a downtrend. That's the first ETF. The other one is YANG. This is a bear ETF on China, because of the tariffs, because of all the news. You know that China's economy is probably having some trouble. And if we zoom in on this chart of YANG, you can see that it gapped up on the news, and then it was pulling back yesterday, but then it bounced back up. And today, originally it was open lower, but it pushed up, closed above yesterday's high. So if this one would give us, if this one would consolidate a little bit within this green candle, give us an entry point that will have a good uh, risk reward ratio as well. The first target is to take out the resistance area here, that's 33%. And then if you can tackle the 200 MA, that's about 60%. So remember, the risk on these two ETFs are relatively big, but the risk reward ratio is not too bad. But also keep in mind that the market is very volatile. So if you want to get in, make sure it's a smaller position, and make sure you can handle the loss. The last one I have today is BITI. That's the short ETF for Bitcoin. This one, it has formed a bottom very clearly, around bottom, and then now it is going to a high, and it pulled back, and now it seems like it's ready to go higher. Um, so this one, there's a couple ways you can trade this. You can wait for it to pull back, maybe to trend. So maybe enter somewhere in this area if the price does pull back and give us a better entry point. And then if we get in here, somewhere here, it's about 5% risk. And then the first target is to take out the recent high. That's about even on the risk. And then the next target is to take out this gap area. And then after that is to try to come to the 200. Or you can wait until after it break above this resistance, this top area here. You can wait until it break through and then enter that. So because Bitcoin is not performing well, so this inverse ETF on Bitcoin is looking good right now. Hopefully you find some value in this video. Remember to not get into big positions. Don't put yourself in a position where you can lose a lot of money. Once the dust settles, there is a lot of good stocks, ETFs you'll be able to find. And then if you have patience, over time, it will pay for sure. So hopefully you find some value in this video. Talk to you later. Bye for now.